Hey guys, how are you? Crypto sniper hat on. Yes, interesting times, interesting times, interesting times. So we were watching last night, and we did a lot more talk in our premium area on crypto sniper, in on both crypto and generally. And I was saying to the guys that we could indeed get that melt up that we were thinking was one of the more minority options in the markets when we initially started. And this is one of the key concepts that are really, really powerful with HVF method. And let's just talk you through this. But before we do that, let's just have a look at that tweet from last night that went out on Crypto Sniper. I gave a little bit of a view of what we'd been discussing in premium in a single chart. We know that we had, for example, the high levels of looks for pen, grabs pen, the volume by price in these key levels, roughly 7,000 and 6.1. This varies by exchange, by the way. That was on Bitfinex, which admittedly is quite a light volume exchange at the moment. And you can do the same for Binance for yourselves. Last night we were having a look at it and we said, yep, in actual fact, since the original first upside HVF in a trend broke, that was actually the break, that was the date, that was in fact the press on. We made target very, very promptly. Amazingly, we have overperformance bands, a methodology you can learn to utilize. Go to the website to find out more. You should still have been in a BTC long trade, because as a first setup in a new trend, you get overperformance, and the overperformance bands keeps you in. And those lines over here are them, and you should have been net long as an investor at least, and you should have closed about 60% on the target, so that it was less emotional on your leverage trades at that juncture point there, having entered in there. That would have got you around about 4,000 to the 5,000 mark. We had a confluence of both target and a key level of 5,000 at that juncture. Since then, you've been kind of grinding, pressing, and then once again reasserting to the upside. At the same point I highlighted here, that innocuous looking day for no great reason, 21st of April, was the point that the BTC dominance started to assert. Now this is the power of this particular chart, and this was the chart that was giving the game away to a large degree. In fact, in one point we thought this could go the other way, and then it broke over here. And that was the key point of that break as you took out the 55 level mark. This said, and bull markets are led by your God market. Your God market is Bitcoin. This is why we asserted early, and then everyone else has followed on this later and started talking dominance. They don't have HVF method. They don't have a mechanism to see how and why this was. We picked up on it, and the tweets are from that period are still out there if you want to have a look. It was some while ago that happened, the 21st. And that then signaled, instead of it being a point where BTC was going to be down, it was going to be up. And we've since said you're looking for up to 65% and overperformance here, because this is also a first setup in a new trend. In other words, it's looking very strongly like this is a new Bitcoin-led dominant bull market. And on top of that, we had the setup and situation where the key levels of significance, where they were really high, and I just warned on that. I'd done a YouTube earlier saying we've had a real amount of participation on the way down at these levels. This could be quite dominant. Last night we were swinging on this, and what we were pointing out is the move from 55% BTC dominance. The break actually occurred on a primer in that 54% level back on that chart, but not to split hairs. What ended up happening is we've moved to the 61% dominance, and we've gone from the 5,334 you were at on that little draw. Let's clear all that mess away. Let's take a smaller pen there. Let's do it there. That little innocuous moment, which coincided with the key break, you've gone from 5,334 to 6,469. You're talking about a massive $1,140, and you were at 60 point whatever percent of BTC dominance. And we were asking the question, well, if we're going through 64.6 there on the BTC dominance, it's going to be greater or equal to the 64%, then surely the BTC USD, when that event occurs, will have gone well through 7K, greater or equal than 7K. And the fact was we had rising wedges, and the three things that happen with rising wedges is they pop out the top and they fall, or they just go straight into falling. That's not a very good drawing, is it? Or the third option, when you are in runaway bull markets, you either pop out the top, fall, or you go straight into your sell-off. The third option is you melt up. And that is the overarching bullish environment we are in, because if you have the context of the fact that you already have a first upside HVF in a new trend, that you've triggered and made it in very short succession in terms of your time frame that you permitted, that's something you'll learn about HVF method if you want to do a course about it, and you are still within your overperformance bands, that means you are bullish and you remain bullish. You have not had a trigger to gain. When you get a rising wedge, you are more open to the minority event of a melt up out the top, which is usually the case. And at 6469 last night, we were saying this thing can moon through it. The other aspect is when we got our volume by price, a lot of the heaviest histograms had already been covered. The horizontal histograms had already been covered. In other words, this thing was accelerating while eating its way through its biggest defenses. This is like the Panzer Army absolutely barnstorming the towns after taking a while to get through the rural areas. It was actually gaining momentum, which points to the fact that we will probably pop right through. The other thing that was interesting that some people said is, oh, but the volume isn't as big as it was under this moment here, especially on an exchange like Binance. We've got to remember that Bitfinex is diminished at the moment. So Binance, you had quite a big volume here, but the volume histograms under here, not volume by price, but along the low, volume, not volume profile, but your normal volume histograms were actually quite under participated in. And all that confirms to me is that then there is a wall of money of people that still need to FOMO in. I call them looters. That is the concept of having no discipline, no method, but can't bear to be in. They stung and hurt from the bear market. They're suddenly realizing that this does look more and more like it's bottomed, and you have this lovely cup. If we look on the bigger time frames on the charts, where's the chart gone? Where's the chart gone? If we go straight to the Bitcoin chart again, and we go back to it, people start to realize that it doesn't matter what currency you look at. We can even go to the euro for just a bit of fun and have a look at that. It doesn't matter what you're looking at. This has cupped out and is actually challenging those levels. And I would say you're virtually 95% assured that the bottom from the bear cycle down here is close to almost certainly being done, and you could be at the beginning of a new bull event. Again, those 50% of that volume by price is covered. So what happens next is probably you actually moon through this, and it'll have collective momentum driven by the FOMO money that could take you a lot further than people imagine. You could not only get into the sevens, you may even get a blow-off spike into the eights. Where do you then sit down for your cup and handle type guys that like this traditional pattern? It's not the most useful pattern, but a lot of people like to talk about it because it makes them sound clever. Well, you could get it. Essentially, the official lip would have been where I've drawn this blue box already. So you have already in effect got the cup that would have been essentially your handle a bit lower down, but some might try say, well, when you get here, that could be in essence how it would go, and then you'll have a handle in there. But the handle will probably end up supporting in what was this previously perceived resistance area. Let's leave the euro one because most of you aren't familiar with the BTC euro chart. Let's bring Binance into the game, which is well supported on volume currently, and see if it's any different. Only you will see that it isn't. We'll put the volume back in here. So it is starting to look like it is going to deal with this key area that we were cautioning against in quite good manner. And the aspect that was being highlighted, that some are saying, oh, I don't think it will make it, because this volume, you've got the high spike volume on your melt up to what we called our first HVF in the new trend. This volume here is relatively lower, but what's actually happening is it's steamrolling through the hardest part of this volume by price. At that juncture, it's almost gone through most of it. And I just think this is a short-term pullback. The Americans will wake up and they'll get engaged. Don't forget, going back to that BTC dominance chart, which was highlighted in that tweet over there, you've still got to get to 65. You have to get there. There isn't a contractual agreement that it goes there, but it's high probability. It's been very good in terms of its performance and how it's dealing with the market. In short, everything about how it's dealt, it's well ahead of schedule. It's not had big pullbacks. So let's leave the Binance BTC. And we warned in a tweet also to some of you, careful, the BTC dominance may take a rest. You're at interim level 2. Go check the Crypto Swiper feed. I don't care. I don't delete my tweets. I get them wrong as well all the time. So, you know, it's not a right or wrong game. It's about getting money. We found our way. We change as the market changes. But I warned on that we're at our interim level 2 at the 61 level. So what do you get? Likelihood of a short-term relative weakness for BTC for a short while. This has actually performed exceedingly well as a setup. It's made very, very good progress and is looking like it's going to continue quite well. This will probably be its biggest setback that it's about to have now. So for those that aren't already in the BTC, actually, as the setback occurs, you may get your chance. But then what will happen is you're all going to rush in and chase into the alts first. And that, in my view, would be the wrong thing. What you do is you get a chance to get into BTC. That might be your biggest pullback. I'm not saying it will go that far, but it might go sub 60. It could go a little further, but this has been exceedingly good progress. So I wouldn't expect it to be too long, but it deserves its first major rest because it's gone literally. If you traded this as if it was something that was tradable, you've already done 60% of your move on very low risk. And as I've already said to us, we actually had a squeeze within a squeeze within a squeeze in there. You've done 2/3 of it, and you've got just a third to go. A reasonable rest, maybe some form of wind-up structure, and squeeze and go, and you will probably overperform. You'll see 65% fall. So Bitcoin will be the dominant one. So the smart people, if you assess that we are reasonably accurate with this, and we won't always be, we'll be inaccurate, but if it plays to type, this reduction in BTC dominance will allow you to probably get one of the stronger coins, the God market coin, the safest coin, the most liquid to trade on that pullback. As it pulls back, the others will start to look like they're relatively performing. Everyone's going to go alt season, and then boom chakalak, you go back on the Bitcoin surge. So the God market leads it, and it needs to keep leading it for a while, even though it can have a pause. And this is the value of having true method, true eyes on the front, and a multitude of community members looking at all aspects of the market. I'm reflecting not my knowledge, but the eyes and ears and the soundness of an awesome crypto trading community as this thing has come alive. And we haven't executed perfectly, but we certainly done pretty well, and we're going to do better still as this comes. And we're glad if it's a bull back, because it's going to make people smiley and happy again, and it does certainly feel like that. I'm positively surprised by the rate at which it's chipped away at the volume by price threat that existed there, and this tells me that there's real power, and that low volume, relative low volume, tells me also it's not being highly participated in. Let's go back and make that point one more time for you. It's not being highly participated in, which is good too, because that means you're still early compared to the FOMO money that I can't believe it. Or everyone's lost their shirts and they haven't got any more investable because they took 98% loss on some alt from the peak to the trough. I hope that's not the case, but I think the cavalry will eventually arrive, and those are what we call the ill-disciplined looters that will be the pumpers, and they'll help you take it up to the low 8,000s maybe into the thing before we have a first sharp reality check again. So we'll see how that plays out. But this volume is not particularly high. You can put a moving average on this, by the way. I was shown how to do that. Let's get its settings going. No, wrong one. I need the mouse. Put your moving average on your volume. It's the only time I actually use moving averages. I have to get the mouse down here. And you can see what the average volume has been like, and it can adjust with you. So you're getting a small trading view lesson as well. Make it a nice strong color that doesn't hide in the mass of the red, and off you go. Little Francis Hunt top tip crypto sniper. You're only just above the average there, as you can see, coming through here. So this would have bumped your average moving average up, as you can see it there, and you're barely over average there, and you've got quite a few histograms just below. So actually it's not particularly highly participated, which probably means we can carry through quite a bit. And then I think when we do blow off, watch out for the likes of shooting stars coming on. When you start to get really big spikes, that was a little bit a unique event, but you will get something similar to that at some point. Can't tell you exactly where that level will be, and then you'll probably have a relapse. This now turns from an enemy, which was a very steep resistance, to a support friend, and that would be another bull market buying moment after any blow off at these levels, once it does something similar to that. So it will come back potentially and rest there as a possibility. That's typical price behavior. It doesn't always give you exactly what you think on the playbook. Read it as you see it. So it was a great night for crypto. Great night for investing and for trading. In the bull market, remember the rules flip as you're starting to say, look, we're pretty sure this is the real deal. It's working its way through here. You're not going to get any easy entries with an early knockback like this down here into those big volume buy prices. It's chewing its way through it, no issues. You want to then start valuing your crypto back in BTC valuation, your dominant market. And the only way not to go backwards is to be holding the BTC. And one of the best times to do it is as it pulls back at a rest, as per the Bitcoin dominance chart. That will get you holding your BTC value growing in fiat. Inside our community, I have one or two that will be exceptions in my belief that will slightly overperform Bitcoin, but we will still hold a large core of Bitcoin, and we will then leverage trade one or two of these unique coins. That's for the community, and you can find out more if you want to join us in themarketsniper.com. So great day for crypto. It looks like the bull is certainly proving its mettle by taking out these volume by price aspects. We've shown you how rising wedges can have those rare moments where in fact you melt up out the top, and that it is indicative of early stage bull markets. You can see the wedge rising out the top. This is what was giving us the clues, because we draw it. We recognize volatility as one of the biggest clues in price behavior, both in this first setup that set you in the bull market in the initial journey, the running of the key targets at the 5,000, the 4.8, the rising wedge, and the melt up. But remember, do not make a habit of chasing melt ups. These are unique sets of circumstances as well. You'll become a looter. Don't become a looter. This is not New Orleans. Don't go smashing those shops and grabbing the flat screen TVs. That is lack of discipline, personal discipline. Don't chase markets long run. It won't serve you. However, know the circumstances for the exception. Early bulls season, God market leading the early bull season. A lot of the boxes being ticked now with far greater confidence. And also the threat, that 20% threat that dropped to 10%, that's now probably not even 5% of a bear market reasserting, is now looking away. The other final point I'll leave you with is I've continued to say we've not really seen proof yet that Bitcoin can go up when a whole bunch of other assets are going down. We've had a few wobbles on the equity market indices. There's fear of recession. I personally think we're already in early stages of recession. It's going to be interesting to see if Bitcoin and then later there will be an old season and some catch up. That's how the market ripples through, and we'll be able to do the relative strength and make sure we're in the right ones. But it'll be interesting to see if we can have bullish moves up in the event of traditional markets in fear and going down. That is going to be the acid test for crypto. And it can and will happen, but we're looking for that moment that it proves itself. Okay, I've spoken for a while. We expect to make 7,000s, to make potentially into the 8,000s actually, and that the BTC dominance pause should be utilized in the best possible way. And with that, I love you and leave you. And there will be 1 or 2 special coins that might just overperform Bitcoin during the BTC dominance era in percentage terms, while Bitcoin gains dominance, while most others will lag. So Bitcoin for most of you is the coin to hold, and of course it's the most liquid. Okay, that is it from me. Find out more, go over to themarketsniper.com, book in, have a chat, contact us if you like to find out a little bit more about what we do. It's right over here. In fact, we're doing a new website soon. Who cares? People don't care about your new website, Francis. Don't be silly. But the whole idea is new branding, new equipment. We're upgrading everything, and we're looking forward to serving you all. Okay, bye for now. Enjoy your weekends. Trade small, trade safe. None of this is advice. Okay, catch you later.